Okay, problem 317 is a lot like having an argument with your wife. It tells you one thing, and then it tells you to do something else, and then when it really wants to do is something it doesn't tell you at all. Well, 317 says refer to the journal entries made in 311 through 315. So that's these, and these say refer to the journal entries in 31, 32, 33. So that's what we really need to do. So we need to look at these and record them in a T account. Now, a T account is not a formal accounting document. A T account is just a device that accountants use to help us figure out what's going on in an account. So I'm going to look at each one of these individually. 3.1 says the company borrowed $85,000 in cash from Eastern Bank. Okay, so the $85,000 debit because their cash goes up, and they have a loan of $85,000 and that goes up. So that's 3.1. The next thing it says is the company used $45,000 in cash to purchase land. This is called an asset shift. So they used $45,000 in cash and they bought land for $45,000. These are the journal entries in T account form. The journal entry for this would be debit cash or credit cash $45,000, debit land $45,000. Graphically, T account wise, this is how it looks. Okay, PE 3.3, the company used $30,000 in cash to repay a portion of their loan. So $30,000 cash down, $30,000 to the loan goes down. Opposite sides, they go in the same direction. So a credit to cash and a debit to loan payable makes them both go down. 3.4 says the company received $75,000 in cash from stockholders. Cash goes up, $75,000. Debit cash, $75,000. Capital stock goes up, $75,000. Credit capital stock, $75,000. The last transaction, it says, is the company purchased a building for $130,000. Well, let's do this piece by piece. So, building is an asset, $130,000. They paid $50,000 in cash. $50,000 in cash. And they signed a mortgage for $80,000. So again, the debits 130 are offset by the credits 50 and 80. So that's journalizing the transactions. Now the next thing it says is what is the balances. Now every textbook I have ever read goes through this long pain in the butt explanation. My explanation is much easier. Add up both sides, take the little number from the big number, write the answer under the big number. So you add up both sides, subtract this from that, and you come up with an ending balance in cash, $35,000. This one, even if you went to Philadelphia Public Schools, you should be able to do that math. 45,000, 130,000, 80,000, 75,000. The loan payable, we have 85 minus 30, 55,000. So that's how the T accounts would look for these accounts.